Because my last 10 years, my income comes overwhelmingly from investments made in the past rather than ordinary income or rather than earned annual income.
And, of course, the penny dropped. Romney doesn't want to release his taxes, not because of what it will reveal about Mitt Romney, the man, but because of what it will reveal about his policies and Mitt Romney's policies and the Republican Party's policies and vision for how to address the extreme and accelerating inequality that threatens the nation's very bonds of representation. Because their answer is to make it worse. Growing inequality is the central story of the American political economy over the past 3 decades, and it has two components. On one side is growing inequality in pre-tax income. That is, before the tax code even kicks in, we've seen a yawning gap open up between the 99% and 1%. CEOs made 35 times more than the average worker in 1978. By 2010, even after the financial crisis, CEOs made 243 times more than the average worker. So the labor market has been producing increasing returns at the very top and stagnating wages in the middle and bottom. But what's even more remarkable is that while pre-tax income has been getting far more unequal, our tax system, the method by which we might gently mitigate this trend, has exacerbated that inequality. The top marginal rate has fallen from 70% before Reagan to a low of 35% under the Bush tax cuts, now extended through 2012. The capital gains rate, the taxes most wealthy people like Mitt Romney pay on the dividends and earnings from their investments, has fallen from 28% before the 1997 tax cut to 15% today. And on top of that, the tax code has also been eaten through with termitic determination by the special interests of the wealthy, creating carve-outs and little hidden pockets where they can hide their income away. To take one particularly egregious example, the notorious carried interest loophole allows people that work in private equity and manage hedge funds to classify their income as capital gains, allowing them to pay the rock bottom rate of 15%. Tax fairness advocates and progressives have decried this for years, but every time changes are proposed to correct it, an army of lobbyists, what political scientist Jeffrey Winters calls the income defense industry, floods Capitol Hill and manages to beat it back. According to Pulitzer Prize-winning tax journalist David Cay Johnston, the top 400 income earners in 2007 paid, on average, an effective tax rate of 16%, while a middle-income earner can generally expect to pay around 22% of their income in federal taxes. The White House has placed this issue at the center of their agenda, calling for tax changes that would restore progressivity to make sure that, in their formulation, Warren Buffett doesn't pay a lower effective rate than his secretary. The original name for this was the Buffett Rule, but people around the Obama campaign have started calling it the Romney Rule. Not only will Romney's own tax plan do nothing to address this obvious unfairness, it would make it worse. His tax plan, according to Citizens for Tax Justice, would cut his own taxes in half. A tax code is a moral document. It is one of the primary ways a democratic nation asserts its values. Our tax code currently says we value wealth over work. If you spend 50 hours a week taking care of the elderly and infirm, or teaching poor children, or putting car engines together, we will tax you at a higher rate than if you make your money off your already existing wealth. The scandal isn't Mitt Romney's tax return. The scandal is the tax code that makes it possible. I am loving the fact that we're going to, apparently heading into this campaign, and we're going to be talking about Mitt Romney's tax returns, and not just his tax returns in terms of what Mitt Romney does, but tax policy, because
I am too.
And Ezra, I know you are too. And I think you wrote I thought, a really good piece where you basically said Mitt Romney's fellow beneficiaries of low capital gains tax rates and also carried interest must be really ticked off at Mitt Romney for blowing up their spot.
He's an accidental cost trader on this.
Yeah.
But I do want to make a point about, you were saying that his plan would make it worse, and I actually ran the numbers on this and was sort of shocked by how much worse. So in 2001, George W. Bush ran for office, and he had a big tax cut because he was running against Steve Forbes. That tax cut, which is going to be paid for out of his surplus, so it's not like you'd have to cut programs for the poor, at least we didn't think so, was 1% of GDP. Mitt Romney's tax cut extends all of the Bush tax cuts and then adds a bunch more on top. It's 3.3% of GDP, 3.3. So it's 3 times as large during a time of deficits. So you'll need to take all of that money out of program cuts, mostly for the seniors and low-income Americans. So the regressivity of it and the size of it compared to what Bush was doing is incredibly immense, 67 trillion over 10 years.
And that he lets tax cuts for low-income people expire. I mean, that I thought was
stimulus,
astonishing.
Yeah. Plus, there's also, let's remember, remember that Newt Gingrich, who himself, I think, releases tax returns and made around $3 million a year, he wants to get rid of capital gains taxes entirely.
And
he wants to zero them out.
Much more regressive.
Right,
than Romney.
even more aggressive.
Romney's much more aggressive than George W. Bush's tax cut. Is the most moderate tax cut of any Republican running for president this year.
I want to bring in David Cay Johnston, who I just name-checked. He's a Pulitzer Prize-winning tax reporter, now a columnist for Reuters, and a visiting lecturer at the Syracuse University College of Law. He's the author of Free Lunch: How the Wealthiest Americans Enrich Themselves at Government Expense and Stick You with the Bill. David, thanks for joining us.
Good morning, Chris.
So how typical, I mean, I'm really fascinated by this Romney story, about his squirreliness about this. And you're someone who has just spent a tremendous amount of time reporting on how people who make a lot of money manage to avoid paying taxes on that money. How typical is someone paying a rate like this in your experience?
Oh, if you're in the class that Romney's in, that's very typical. Look at the top 400 taxpayers. Back in 1992, 6 of them had an effective tax rate of 10% or less, and that may mean they paid absolutely nothing. Now it's 30 of them, 5 times as many. Now it's a small number, but it's 7.5% of people who are making close to $1 million a day. Romney's 15%, the way to think about that is a single worker who makes just a bit over $60,000 pays in federal income taxes 15% of their income. And the issues that Romney's raising, I don't think can be resolved unless he releases his tax returns from the years we care about. He's been running for president since 2007, so he's had 5 years to write a tax return with political purposes in mind.
Right.
And unlike wage earners who can't do it, he can. But his returns from 1984 to 1999, the years he ran Bain Capital, those are the ones he needs to release. And the issues it's going to reveal to the American public, I think, can have a powerful impact on this tax system we have, which once you get into the top reaches becomes regressive.
Cay Johnston, you're running for president on the Libertarian Party line. You're a Republican governor. I'm curious if you would like to step to the plate to defend a capital gains rate of 15% and a structure of rates that is in effect regressive as you get up towards the top of the scale.
No. Well, so I'm the lone voice. I was the lone voice out there. I get to carry this forward now as a message running as a Libertarian candidate for president. But I share in the outrage of the Tea Party, which is we need to slash spending. But I also share in the outrage of Occupy Wall Street, which is this country doles it out unfairly. This is not a level playing field at all. It's up for sale. And you talked about it, the income defense industry. That's what exists in Washington right now. So I am advocating the fair tax. I would love for those watching this show to check it out, fairtax.org. But I think it is, as the name implies, it does away with all federal tax and replaces it with a 23% federal consumption tax, which by all calculations will be cost neutral over a very short amount of time. And it is, as the name implies, it's fair. The more money you make, the more fair tax you'll pay.
Well, but it's not progressive.
It's more regressive than our current tax code. There have been a number of analyses run on the federal. Well, like David Cay Johnston.
Yeah, David, weigh in.
That is, I got to tell you, Governor, you are so badly informed on this, it's astonishing. First of all, if we go to this tax, everything you have, you're going to have to have a receipt for if we're going to have an enforcement mechanism. Secondly,
you're going to pay for it at the point of purchase.
Can I finish?
Well, you really slanderous statements to start with.
Well,
so okay,
let me try to educate you, Governor.
Go ahead and finish, David, and then we'll hear from you, Gary.
You think there won't be black markets? There'll be enormous black markets.
Sure,
people
there'll
who
be
now
black markets.
slip into buildings
can
to
I
buy
address
drugs.
this as we go?
Wait.
Let me
lay out your case against it, and then Mr. Johnson will weigh in. You've upgraded to Mr. Johnson from my last.
There is a way to have a consumption tax that works. It's a subtraction method value-added tax because every party along the way has an interest in collecting the tax and ultimately getting it to the government, and it helps with exports. But the retail sales system we have now is terribly porous. Lots of things are not taxed, and I'm absolutely certain it will lead to pressure because of black market marketing to have all transactions done digitally, no cash. Then your privacy goes away. Everybody, your litigants, an estranged spouse can figure out where you were, when you were, what you paid.
Gary, would you like to just respond?
Just to the black market comment. First of all, there's black market that goes on today, but when you take in your money in the black market, you've escaped it effectively. You take in your money in the black market when it comes to the fair tax, you're going to have to turn around and consume with those dollars. So I'm going to argue that, in fact, it will be subject to the fair tax.
Melissa.
Yeah, but the fact is that the sales tax is significantly more regressive because of the nature of how this spending occurs relative to the amount of income that people have, right? So, in other words, if we think about that bundle of items that a household purchases for working class families, that bundle of a monthly of household purchases are requirements for the kind of basics of life, housing and food and clothing and shoes, and for those who are on, for example, Mitt Romney's level, the bundle of things that they're purchasing includes a variety of things that they could just choose not to purchase. Where at the bottom, you can't choose not to purchase things because they are requirements.
And this is one of the ways in which sales taxes, just regular sales taxes that we have in most states, do end up hitting people who make less money particularly hard. David, I want you to talk more about this, but we're going to take a break and come back, and we'll keep talking tax fairness right after this.
Back in 1967, your father set a groundbreaking, what was then a groundbreaking standard in American politics. He released his tax returns. He released them for not 1 year, but for 12 years. And when he did that, he said this: 1 year could be a fluke, perhaps done for show. When you release yours, will you follow your father's example?
Maybe. I don't know how many years I'll release. I'll take a look at what our documents are, and I'll release multiple years. I don't know how many years, but I'll be happy to do that.
An absolutely brutal moment. Brutal, awkward moment for Mitt Romney, talking about whether he was going to release his tax returns. So, all right, so we're talking about inequality, the tax system, whether the tax system exacerbates that inequality or mitigates it. Cay Johnston is an advocate of what he calls a fair tax, which is a 23% flat tax on consumption. David Cay Johnston's on the line, Pulitzer Prize-winning tax reporter. Gary, I want to give you a chance to respond to the point that Melissa made, which I think is the point that we make on the progressive side all the time about consumption taxes, which is that they are regressive in the way that you're suggesting.
Well, one thing that David pointed out too is that this will make American exports much more competitive. Arguably, the fair tax is cost neutral. In other words, the Coca-Cola that sells for $1 today has embedded tax that isn't evident to the tune of about 23%. You take that away, you implement the fair tax, arguably the Coke doesn't sell for $1 anymore. It'll sell for 80 cents and it'll be subject to a 23% tax. But it's not regressive, I'm going to argue, from the standpoint that it issues everyone in the country a prebate check. So we all get $200 a month, $2,400 a year, which allows all of us to pay for the fair tax up to the point of the poverty level. That's the escape from that criticism. So it also promotes savings, and something that we really do need in this country if we're going to...
Yeah, let me just clarify for people, because this is the standard way that people amend a pure flat tax to make it not completely regressive, right? Which is that basically you're not taxed on the poorest of the poor, up to the poverty line, aren't taxed at all. They're exempted, essentially. There's a prebate check. There's just so that people are tracking this.
We all get that check, though. We all do.
Right, but what it means is that the people who are making very, very little money, at the very bottom, there's a little bit of progressivity because the poorest of the poor are not paying taxes. David Cay Johnston, I want to give you a chance to respond.
Well, you know, the most conservative idea in Western civilization is progressive taxation in the classic meaning of conservative, because it's 2,500 years old, and it was the invention of the moral principle that the greater your gain enabled by the society you live in, because there is no wealth without taxes and a society. Taxes are the foundation of all private wealth. That's what gave birth to democracy in ancient Athens. The idea that this tax will work beyond its terrible administrative problems, and I'm not arguing it's the consumption tax, but the national retail sales tax, a silly idea invented by and promoted mostly by a radio talk show host, is just no serious student of tax would advocate this because it can't work. And the idea that we that this prebate is a good idea is, excuse me, in 1972, George McGovern proposed that, and he was ridiculed by all the conservatives when he put forth his tax plan to do exactly that in 1972.
David,
so we've had this shift.
I want to steer you back to this issue, though, which is sometimes when you hear people make the argument for the flat tax or some sort of more the fair tax. Gary wants me to call it the fair tax. It's flat, and whether it's fair is up for debate. Sometimes people will make the argument, and this is the one that sounds a little compelling to me, right? Which is that there is a wedge opened up between the rate that is on the books and what people are actually paying. We have a huge problem with carve-outs and loopholes and enforcement and all sorts of ways that people hide income that are entirely legal, that are in the tax code. In fact, we now know some of the funds that are in Romney's portfolio or domiciled in the Cayman Islands, which is usually a way of evading taxes. How do you deal with that issue? Because there's a kind of libertarian argument that says the system's going to be gamed, and so you have to come up with something simple. So as someone who studies the mechanics of this, what is the response to that argument? How do you deal with the gaming that's happening, that's manifestly happening?
Well, you know, I believe in democracy. And we elected leaders who did these things. The reason the tax code is exploding isn't because of you and me, Chris. It's because, or the viewers of this show, it's because of favors being handed out in return for campaign contributions. We can stop that. There's no reason we can't stop it. You know, when this country was founded, corporations were limited to a single purpose, usually a 20-year life. They had to prove they served a public purpose, and hiring people was not counted. That was considered a necessity of the business. Corporations need to go back to the status of being privileged, and we need to have a Congress that responds to the people. But so long as people say, oh, I'd rather watch Dancing with the Stars and pay no attention to politics and outsource citizenship, then those people who make money off the system are going to be in power.
But if the answer to my question is that people need to stop watching Dancing with the Stars, I think we are really in a bad spot.
I think there are two things.
We
need to be able
to.
We need to be able to separate two things that often get conflated here: a simple tax and a flat tax. You can have a simple progressive tax. There can be 3 brackets and no carve-outs. You can do that. It's not that hard. Number 2, the progressivity of the regressivity of the fair tax. There is a prebate, but remember, in our current system, we have the earned income tax credit, we have the child tax credit, we have a number of refundable tax credits, prebates of a sort.
All those go away.
They all go away, so you're taking those away from the poor. And the other thing, what our system currently has, and this is the other side of the fair tax's regressivity, that the fair tax doesn't, is it has higher rates on the rich. So you're giving folks a bit of a prebate that does help with the progressive base regressivity, but compared to the system we have, compared to any progressive tax system, it is much more regressive simply because it does not tax people who make more money at a higher rate.
David Cay Johnston, I want you to stick around because I want to ask you a question about the multi-million-dollar IRA that Mitt Romney is currently holding, and what's up with that after this break.
I can explain that.
David Cay Johnston, one of the things that was revealed, I think it was a 2010 FEC financial disclosure filing, if I am correct. Mitt Romney holds an IRA with a value, I think it's in multiple millions. I think somewhere between 20 and 100 million. There's these wide spans that are in financial disclosure forms that you fill out for the FEC. And there's been some discussion of why would you have an IRA with that much money in it? Because the general logic of an IRA is for your typical middle-class earner. You want to not pay taxes on it when you're in your peak earning years, and then when you draw it out, you pay taxes and you're earning much less, so you reduce your tax burden. But when you're dealing with an IRA of that size, what's the story there? There's been kind of a lot of speculation about what's going on with that IRA.
There's been a lot of speculation that Romney somehow put low-value stock in. You can only, at the time he did this, only put $2,000 or so into an IRA. Most likely what happened is he has a retirement fund at Bain that was in a blocker. A blocker is an offshore entity designed to block U.S. taxes. And it may have been the only place he had cash to invest. So he invested in one of these deals through his rollover IRA, perhaps after he left office. But it has a secondary function. An IRA is essentially an asset protection trust. So if Romney has $20 million in there, that's 10% of what he says is his wealth, not counting the $100 million he gave his sons. he effectively has created an asset protection trust so that if everything goes wrong, creditors still can't come after that portion of his money as long as he follows all the right rules.
I see. An asset protection trust so that if you have to defend yourself from creditors, that's a technique for parking there.
And without any of the smarminess of setting up a trust in the Cook Islands or somewhere else.
I see.
Absolutely.
Well, welcome to Tax Talk here on Up with Chris Hayes. If anyone has a live Twitter about what your tax problems are, I'll ask them to David Cay Johnston, and he will dispense advice. Melissa.
You know, one of the things I want to both expand on that David said, but also challenge him a little bit on is this question of sort of who's at fault for this, or how does this happen, and how do we get on the other side of this? And you know, I too am a big believer in democracy, and that, you know, in certain ways we get the country that we vote for. But I do think that there's a little bit of the sort of denigration of the realities of human life to say, well, if you sit around watching with Dancing with the Stars, then after all, the rich people are just going to take it all. What I really appreciated about what David said is, look, there is no creation of wealth without the realities of a society that undergirds it. Your workers drive to work on roads that are paid by your government, and you educate your workers in the public schools. And I think part of what needs to happen in this presidential election year, even beyond the intricacies of the tax discussion, is a revived discussion about the value of the public good.
David Cay Johnston, Pulitzer Prize winning tax reporter. Your book, the two books that you've written on taxes are two of the best I've read. Certainly the best tax books I've ever read. Thanks so much for joining us this morning. Really appreciate it.
Thank you.
All right, the best thing that I read this week, right after this.